Hi traders, today we're going to be looking at the US dollar Japanese yen as well as the Japanese yen in general. Are we starting to see a little bit of a turn in the tide here for the Japanese yen at the moment? So we had the interest rate decision. They held interest rates at 0.5% as expected. A little bit more data that kind of came with it as well. We can see that we had some final manufacturing PMI, which came in a little bit higher than forecast. Nothing dramatic there. We also had quite a big shift in consumer confidence. That came down to 31.2, down from 34.1 previously. Also beating out expectations of 33.9 to the downside. So actually we saw quite an interesting development here where actually consumer confidence has started to fall a little bit. Now that could obviously be down to a lot of external factors as well, and that's one thing that the BOJ Governor 𝖢𝖣yiِ has been talking about. So Forex Live, Justin Lowe's just done a little piece of just what's been going on, and the headline is that 𝖢𝖣yiِ says that underlying inflation to cool down due to tariffs and overall slower global growth. So the expectations of a rate cut from the BOJ right now could actually be diminishing a little bit, especially because of what's going on the sort of tariff front as well. So just a few kind of remarks here as well. So the remarks on slower growth and softer price pressures are aimed to justify the pause today and perhaps in June as well. It's no doubt a more dovish take. Analysts are largely seeing Q3 as the next point in which the BOJ will hike next, but we'll have to see how the narrative changes depending on Trump's tariffs as well in the weeks and months ahead. So what we basically outlining here is that if tariffs are significant on Japan, that could obviously cause a slower sort of growth in Japan, cooling inflation, and then maybe the BOJ doesn't even hike interest rates. That now could be a possible risk play for the market. Another headline as well basically just says that, you know, they are looking at potential rate hikes if US tariffs are zero or at a low level, then quicker rate hikes could be possible. So that is just kind of outlining what we are expecting now. So let's say we see a tariff that is 10% or lower, that could be considered as a low level tariff, and that then most likely won't have too much of an impact on Japan's economy. Some interesting data as well. So let's just go take a look at sentiment data, right? So we talk about the Equipment Traders report a lot. They're now maxed out on positions. If we go take a look at the chart here and we have a little look at positioning from hedge funds in particular, they are at historical levels. We've talked about this in the past. One thing that we talked about was if price reached this area here, could that have a big impact on what happens to dollar yen next? So if this hits this area here, is dollar yen basically going to rally from this point? And that's the kind of feeling that we're seeing in the markets right now. If I just go over to US dollar Japanese yen, we came into that 140 spot 50 handle. We've started to kind of break through this weekly trend, the daily chart starting to potentially now create that little bit of a sort of higher high pattern. You know, could we get a higher low and a continuation up into sort of these previous consolidation levels, maybe up into the 148.75, maybe even into the 150s if we were to see a significant pricing in now that maybe we won't see those rate hikes as aggressive, because that's what the market has been kind of pricing in this narrative here, is the fact that the BOJ were going to hike rates aggressively. The Federal Reserve were going to cut rates aggressively. That's why we've seen this kind of downside play here, as well as the factor that the market's just not confident in US dollar debt anymore. So they're not confident in owning US dollars. So the US dollar has weakened off the back of that, just in sort of simple narrative terms. But, you know, we have an extreme here that has been increasing as price has been moving to the upside here. As you know, we know that hedge funds are trend followers at the end of the day, so as price increases, they are going to increase their positioning. They reach points of extreme, usually around large levels of resistance, and they can often offload some of those positions off. Now, do I think this is going to be the offloading that sees price come all the way back down into these lows? I probably don't see that happening because of the weakness in the US dollar, but maybe just a pullback into sort of like the areas we've just discussed, this kind of 148.75 handle, and then we'll see how the narrative is playing out at that point. Maybe we'll get more updates on tariffs and things like that. I just add a little bit of technical analysis into this as well. The Japanese yen was one of the strongest currencies last week. It moved to -1 this week, so it was on my short list this week, especially against currencies that have been stronger. Kiwi yen being one of those markets that I pointed out as a potential reversal market for this trading week. If we go take a look at how Kiwi yen is performing at the moment, it's up 0.82% right now. If we have a little look at it on the 4-hour chart, it recently broke through that trend line resistance and is starting to trade to the upside now. So this is a market that I'm very, very interested in going forward, seeing if we can trade a little bit higher up into the 87 handle potentially. But now we've got this kind of sort of V bottom there, market could potentially trade higher. I think the only risks to this obviously is if we get kind of shock tariff announcements, and I think if we see some shock announcements, how will that impact prices globally? Well, you know, we could see this sentiment here for like the S&P 500 diminish and the Nasdaq. You know, let's see how the volatility index kind of creates. You know, if we start seeing moves back below 20, I think dollar yen will more likely trade to the upside at that point. If we see large spikes in the VIX, then that is usually dollar yen to the downside. So just keep an eye on that. Swiss franc has also kind of taken charge of the strongest kind of safe haven again against the Japanese yen. This has now broken through a nice little trend line as well. Looks like it's continuing to the upside. Obviously, another factor we have to consider as well is oil prices. Now, usually lower oil prices are good for the Japanese yen, so there could be some kind of underlying strength there still. And obviously, if this continues to fall, then it could have an impact on the sort of situation in Japan's economy. Basically, businesses will be able to import or export at a lower cost. So that is something that could help profit margins and things like that. So really speaking, one market that I did want to just kind of highlight is the Nikkei, right? So this could be a market that really shines. You know, if you think about what could be happening, if we see the pace of rates just kind of slowing down in terms of they're not going to hike as aggressively, what does that mean for investors in Japan and businesses in Japan, right? So they will benefit from lower rates. Consumer confidence is low, but if we see lower oil prices and things like that, then the Nikkei could perform pretty well going forward. And you can see that we're already up substantially here at the moment. So those are just my thoughts on the Japanese yen. I hope you've enjoyed it, and speak to you soon.